Hey everyone, we're going to cover a problem that you would typically see in a liabilities chapter in your introductory financial accounting course. So I'm going to cover the payroll tax problem. So we're going to look at the payroll tax journal entry from the employee perspective. So the amount you're withholding on behalf of your employees and remitting over to the government. You need to create a few payables for that. And then we're going to look at the employer side, essentially the amount that you have to pay on behalf of your employees. So there is things like state unemployment tax and federal unemployment tax that your employees don't pay, but that the business is required to pay and remit over to the government. So things like Social Security and Medicare, however, is paid both by the employee and the employer. So we'll create a couple different payables, show our liabilities on our balance sheet, and make sure everything is correct. So let's go ahead and look at this problem. So the payroll register for O. Meyer Company for the week ended May 18th indicated the following. So they had salaries of $642,000 and federal income tax that was withheld of $128,400. This says the salaries were all subject to a 6% Social Security tax and a 1.5% Medicare tax. The actual Social Security tax rate, I believe, is 6.2 and Medicare is 1.45. But we're showing this for simplicity purposes, and almost all introductory accounting textbooks use these rates, but you will want to check with your particular course textbook just to make sure you're using the correct rates. They'll typically tell you in the problem. And then in addition, state and federal unemployment taxes were computed at a rate of 5.4 and 0.8 respectively on 12,000 of salaries. So there is a maximum salary amount for each individual employees that federal unemployment and state unemployment is subject to. So it just depends on how much employment tax has been collected already on each individual employee. So in these problems, they will tell you the amount that you're going to multiply by your federal unemployment and state unemployment tax rates. Okay, so let's go ahead and get our journal entries prepared. So we want to journalize the entry to record the payroll week for the week of May 18th, and then journalize the entry to record the payroll tax expense. So the payroll is the amount you're paying out to your employees. So this is the amount of Social Security, federal income tax, and Medicare tax that you're collecting on your employees' behalf and then remitting over to the government at your specified intervals. So our debits for this one is always going to be salaries expense. It can vary depending on what type of textbook, again, you're using, but you'll want to use your chart of accounts to see what particular account you would use for this. So for this particular textbook, they have salaries expense. So as we know, anytime you debit an expense account, you're increasing it. So your salaries expense is your $642,000. So that's going to be my debit. Now we're going to go through and add our different payables. The reason why you can't just say it's just one payable is because you have different payables. So you have your gross pay and then the net pay. So the net pay is the amount that you're actually paying out to your employees. The difference between that is the various taxes that you're collecting. And so you need to separate out like your Social Security and your Medicare and your federal tax expenses, or payables, I should say, because those are going to different areas. So when you remit those over to the government, you're not just sending it to one spot. You need to say how much you're sending for Social Security, how much you're sending for Medicare, and how much you're sending for the federal income tax, so that you can break it out to make sure the government will want to make sure essentially that you're collecting the proper amounts essentially. So payables are a liability. Anytime you're increasing a liability, you're going to credit it. So we're going to indent for our credit. And we're going to make our Social Security tax payable. I'm going to abbreviate just to make things simple, but SS is for Social Security. So we have a Social Security tax payable. To figure out the amount, we're going to use our salaries, not the amount there, and multiply it by our Social Security tax rate. In this case, it is 6%, so 0.06. So we have a Social Security tax payable on the amount of $38,520. All right, so we also have a Medicare tax payable. So let's go ahead and indent that. So Medicare tax payable is going to be our gross salaries of $642. Multiply it by our Medicare tax rate, which is 1.5%. So it's 0.015 in decimal form. And that's $96.30. We also had federal income tax that was withheld. So we're going to indent this and create another payable. So federal income tax payable. And this is the amount that's given to us because the various amounts are going to depend on what your employee elects. So how many withholdings they have, how many dependents they have, any extra that is withheld. So they're going to designate this on their W-4s that are filled out every year. So it's not something that we're going to calculate. It's something that is calculated. Well, at least you're not going to calculate at this stage in an introductory financial accounting course. You may calculate that later on. All right, and so our final credit, because in our rules of debits and credits, you have to have at least one debit, at least one credit. They have to be different accounts, and they have to balance. So the only thing we're not doing is balancing at this stage. So essentially, our net pay is what we're looking for. So the amount that's actually going to go out to the employees on their paychecks. So we have one last payable, and it's our salaries payable. And to figure out the amount, you're going to take your debit of $642 and subtract out all of these amounts that you're withholding out of their paychecks to give you the amount that you're paying out to your employees of $465,450. Okay, so this particular part of the problem is done. So part A is completed. Again, this is the gross pay. So if you've gotten a paycheck, I'm assuming you've worked and you've gotten a paycheck. You notice when you get your paycheck, it's a lot less than the amount. So if you are an hourly employee and you worked 18 hours, you're not getting the full pay because there are taxes that are withheld. So you have your gross pay here, subtracting out all the taxes to get down to the net pay. All right, so now we want to journalize the entry to record the payroll tax expense that was incurred for the week of May 18th. So essentially what the employers are paying. All right, so our employers, we have payroll tax expense instead of salaries expense because this is a cost of doing business for having employees essentially. I'm not going to put anything in the amount here until we're done. So I'm just going to put the debit here. So our payroll tax expense is our title. The reason why I do this is because I want to add up all my credits to get to my debit. So I'm going to save that part for last, and I'm going to go through and do all of my credits. So the employer plus the employee has to pay Social Security tax and Medicare tax. So the employee has to pay it, and then the employer has to pay it on behalf of the employee. So they're remitting this over to the government on behalf of every employee that they have. It's going to equal the amount that the employees paid. So we've already done that part up top. So we're going to do the exact same thing down here. And the amount is going to be equal to what the employees are paying. So we have $38,520 down there. And we have our Medicare tax payable is equal to our $96.30 up here. So those are going to be the exact same. So we've already completed that. What the employer has to pay and remit over to the government is something a little bit different than the employee when it comes to SUTA and FUTA. So the employees don't have to pay this, but the employer does have to pay this. This is our unemployment tax. So federal unemployment tax, I'm going to abbreviate as FUTA. So F-U-T-A, payable, because it is a liability. And we're going to do this based off of what it tells us in the problem. So we have 12,000 of salaries. So state rate is 5.4% and federal unemployment rate is 0.8%. So, and it is subject up to 12,000 of salaries. So we're going to do 12,000. Multiply that times our rate of 0.008 because it is a 0.8%. And that gives us $96 of FUTA payable. Then we're going to do the same thing for our state unemployment tax payable. We're going to take our $12,000 in salaries that are subject to our state unemployment tax, multiply it by the rate of 5.4%, which is 0.054 in decimal form. And we have to pay $648 of SUTA. Oops, then I spelled that wrong. Let me go ahead and fix that. My typing isn't the greatest, as you can tell if you've watched my videos before, but it works. All right, now I can go back and calculate my payroll tax expense, because if you remember the rules of debits and credits, I have to have at least one debit, at least one credit, different accounts, and our debits have to equal our credits, so they have to balance. So to figure out my payroll tax expense, I'm going to add up my Social Security tax payable, my Medicare tax payable, my FUTA, and my SUTA. So we have $48,894 of payroll tax expense for the week of May 18th for this particular business. Okay, so that completes the payroll problems that you would see in a typical introductory financial accounting course. So if you'd like to see any other videos, please comment below, and always subscribe to the channel if you want to keep up to date on any videos. I will continually be adding videos as the years go along, just to make sure I'm covering all the different accounting topics. So again, if you'd like to see any additional videos, comment below. And in the meantime, happy studying.